Hello traders, welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to start the week with some of our trading plans. Today we are going to cover the euro dollar, the Aussie dollar, the S&P and the CL or oil. Don't forget that in our website we have more instruments that you can get by taking the membership. So let's start. Alright traders, this week we are starting with the euro dollar. Let me show you the monthly chart, the bigger picture. On the bigger picture, this is the market cycle that we are right now, where the price is building an ending diagonal wave, 1, 2, 3, 4, and 5. As you can see, the ending diagonal wave comes with ABCs for each leg. So we have ABC for 1, ABC for 2, ABC for 3, ABC for 4. Yep, that's right, is valid because it's an ending diagonal wave. As you can see, this is a 5-wave sequence inside the C wave. So we are in this monthly cycle where the price is building the B wave green, then we look for the move up above A, and then the sell-off. This is the main plan on the bigger picture. Now, once the price completes the wave B, of course, we're going to focus on the move up. It's important to understand the bigger picture because then you can have a better sense on the lower time frames of what's going on. That's one of the key advantage of the Elliott wave theory, that we can have the monthly chart into the lower time frames thanks to the multiple time frame analysis. So in the lower time frames, traders, we are inside the wave X blue. That's what we are working on the lower time frames. Pretty interesting, right? Having access to this higher time frame analysis. In the Elliott Wave Street membership, every Monday, we publish the charts on the bigger picture report every Monday on all the instruments we cover with monthly and weekly charts. Let's go back to the lower time frame, the hourly chart. Last week, we started a bullish setup on the euro. Let me show you what we did. We went long at the 106.80 area. When the price rejected this low, we went long here. The price moves like 40 points in our direction, enough to book some partial profits. Then the price moves down to grab stops. In this case, didn't take our stop because we have it at the 106.55 and the price went to the 106.56. But let's suppose that during this leg, it takes us out at the break even because we already booked some partial profits. And if that was the case, we have to trigger again. So it seems that we are in some sort of a leading diagonal wave. I'm thinking tomorrow for the update or for the afternoon update for my clients. I'm planning to do some things here. But the point here, traders, is that let's suppose that we have another 3-wave sequence and that's where we can buy. We're going to check an exercise that I have ready for you this week on the Aussie dollar that is going to reinforce how to trade with zigzags, because that's the key when you are applying the Elliott wave counts, understanding what is corrective and what is not corrective. Traders, here is the Aussie dollar. The Aussie dollar is one of our favorites for this week because we are finding the end of the leg down that we are calling the wave 2. So the wave 2 could be done. We are going to talk about this part of the process. The target is the previous high. The big question is if this is the end of the second wave or not. And to answer that question, the first step is having a 5-wave sequence, in this case, a leading diagonal wave. That's why the waveform moves inside the wave 1. The second step is having a zigzag, and here is where the magic starts. Because the zigzag traders needs to have a 3-wave sequence, A, B, and C. A 3-wave sequence. Once we have the 3-wave sequence, we have the permission to buy it. One of the biggest mistakes that the beginner can start applying when trying to find trades with the wave theory is speed. Speed is extremely important. Let's suppose that we have this candle here with fast price action moving in this direction. The beginner, the Elliott wave beginner, will say, oh, that's nice, I have to buy it because it's hitting the 78.6% Fibonacci ratio and also is leaving a tail. I don't have anything against using Fibonacci levels, but personally, I don't like to use them. But of course, I completely respect traders who like to use Fibonacci levels and traders who have systems around these techniques. Of course, everything that can make you a better trader is welcome always. But from my personal point of view, I prefer price action. So the speed of the market invalidates any attempt of buying the second wave, because we should never trade in the direction of that speed. That's a huge mistake, because when we have a big candle, the big guy has been withdrawing the liquidity on the bid side of the trade, and there is no demand. So trading without demand is a huge mistake, because you are trading against the strong direction of the market. So the 5-wave sequence can become invalidated if you have a fast corrective wave. This little trick can change your life completely in your trading, because you can wait for good shape corrective waves in order to have the highest probability. Example, look at this ABC. Perfect. You can sell it. Let's suppose that you are thinking that this leg is a wave 1 when you were there in the live market. Nothing bad about it. But look at its corrective. It's fast. So there is no way that you will try to buy this thing. Look at the difference between this price action and this price action. Wow, right? Slow and fast. Never go against the fast price action. Always go against the weak traders. So these little tricks, of course, are going to change your trading forever. On Elliott Wave Street, we have a lot of tricks to understand and to help you validate better your wave counts. So you can visit elliottwavestreet.com/membership and start your trial, and you will find a lot of value inside of our website and our techniques, because we have plenty of them. So this is the setup on the Aussie dollar traders. Little tricks that will change your trading forever. And you will start focusing on price action, and you will start understanding the supply and demand. Fast price results in a fresh low, and you don't have to waste your time or money trying to buy something that clearly is going to take out the previous low. Right? That's extremely important. But on the other hand, if we have a good zigzag, ABC is slowing down, losing momentum, then we have a green light to capture the wave 3. And this is one of our favorites for this week. We are going to focus on this trade this week. Today in the morning, we already started a dollar CAD sell trade based on that concept. Let's continue with the S&P. On the S&P traders, this morning, we were looking for this rejection. Wow. Look at this beautiful ABC formation. The price moves to the previous high. Easy trade today. Easy trade. If you have been following our analysis, you already know that we have been bullish on the S&P. From the lows, we were able to capture the whole move up. Beautiful trade. Beautiful trade. Now what? Now we're following the trend. So any corrective wave is a buy trade. Like this one. Beautiful ABC today. Don't you think it's completely objective seeing an ABC, finding the rejection and starting to trade on that direction? The target, the previous high. That's it, for day trading, for scalping, even for a little swing. Now let's see if it's gonna give us a validation for another corrective wave. If not, if it extends, okay, we wait. Or if we're already in the trade, fantastic. That's the process, traders. That's the process. At the end, you only need to master one of two setups and practice and have a good practice, and you will have a fantastic trading career. Trust me, it's not that difficult when you start doing the things in the right way, when you start applying the concepts in the right way. It's actually simple. Let's have a look at oil. As you already know, we have been short, and this trade has been working fantastic. Here, we started the sell trade, and this trade is just beautiful. Now, this week, we are in a corrective leg, so our job is finding the end. Let's suppose that here we were seeing a sell trade. Completely valid. Right? This is a sell trade. Why not? It's an ABC. That could be the beginning of the continuation lower. But when you have this leg, it's enough to book some profits. If here is your stop and here is your entry point, this is more than enough in terms of the risk-reward ratio to book partial profits. Sometimes this is going to happen. The corrective wave is going to become a little bit more complex. So in those cases, you are going to book partial profits in the first trade, and you are going to wait for the next signal. The next signal could be once the price returns below this area here. And the target will be the previous low. So we continue with the bear trend in oil. In case that oil starts moving up fast, let's talk about that possibility. Of course, we're not going to sell it, first of all. And let's suppose that we have something like this. If that's the case, we have to be extremely careful with the S&P because oil equals inflation. Higher inflation will push interest rates higher. Higher interest rates will push the markets, the risk markets, lower. So, of course, this is the fine print of the process. We need to continue continuing the bear trend, to see the oil moving lower. Lower oil price, lower inflation, lower interest rate, higher the S&P. That's the equation. Very simple. Traders, that's the plan for this week. Now, I want to invite you to the website, ElliottWaveStreet.com. Under the membership tab, we have a fantastic membership that is going to change your trading forever. And you are going to find a lot of value in our content. You can pick your plan. We have the special of just $19 per month, so you can trial the service. And also, you will get access to the education library, a lot of courses to understand how the markets work, to understand how the price action works, the institutional cycles, and more. So that's the educational library. Also, we have, traders, a special offer with one of our partners, that is AvaTrade for international clients. So please read the terms and conditions of the offer here. It's important. And if you consider that you apply, you can open an AvaTrade account from $1,200, and you will get 12 months of full access of Elliott Wave Street, full access completely free. So here is the offer. If you want to apply for this special offer, you can activate your offer by clicking here. This is going to open a PDF with a step-by-step guide that you need to follow to apply for this special offer. So your education is going to be completely free with us, with the membership, by using this special offer. So explore this page, and if you have any questions, right here on top, there is our WhatsApp number, our email. Any question that you have, we are there for you. We are always there for you to support your trading career, to help you find the mistakes that you have in your trading and to solve your mistakes. I promise. Join us, and we are going to help you finding your mistakes, and we are going to help you improving your trading system, and you will start getting the benefits from the first second you log into our platform. Traders, have a fantastic start of your trading week. I'll see you soon. Take care. Bye-bye.